In this presentation, we will put together a departmental contribution income statement from our data. The data being up top, we'll enter that information into the blue areas down below. Up top, our data will include Department A, Department B. We've got the sales, cost of goods sold, direct expenses, those being the salaries, insurance, utilities, depreciation, maintenance, and those are the ones that we will apply directly to Department A, Department B. In other words, they're pretty straightforward, not too difficult to apply because we're going to apply them directly. The indirect expenses are the ones we're going to have to do a few more calculations for. So we'll have the indirect expenses then, including the salaries, the insurance, the depreciation, and the office expenses. We're going to use the allocation base of, and this is what we'll use to break out these expenses between the departments. We've got salaries is going to be the sales. We've got insurance, which is going to be using square footage for the allocation base. And then the office expenses, we're going to allocate that with the use of the number of employees in each department. And then we'll have our added information, Department A and Department B, which includes the square footage and number of employees for those departments. Okay, so let's go through our departmental statement. We're going to have basically an income statement for our two departments, A and B, starting off with sales. So we'll have sales up top, and we're going to pick this up just from our data. So we're going to start off nice and easy. We're going to pick up the information that's given straight away, straightforward, directly applied, that being sales of the 125,600 tab for Department B equals, scrolling back up, that's going to be the 464,400. Then we'll pick up the cost of goods sold. We're going to say equals, scroll back up to the cost of goods sold tab, and then we'll pick that number up for Department A by saying equals, scrolling back up. That's going to be the 480,000 and tab, and then Department B equals, scrolling back up, the 301,860 and enter. That'll give us our gross profit. So we have the gross profit, which we will calculate by subtracting those two out, equals for Department A, the 825,600 minus the 480 and tab. Department B equals the 464,400 minus the 301,860. Okay, so then we have our direct expenses. Also very easy for us to apply. We're going to do this fairly quickly. Direct expenses, colon, that's going to indicate that these will be the direct expenses below. We're just going to take this from our data because these are the expenses that we can directly apply to the department. In other words, we don't have to use any allocation method to allocate them between the two. They're just pretty much straightforward for that reason. We'll take them straight from our data set. So first item, we're going to say equals. Scroll back up, it's going to be the salaries. Tab, we'll pick up the number for it, equals. Scroll back up, it's going to be the 120. Tab, for Department B, equals. Scroll back up, it's going to be the 83. And we're kind of practicing our data entry here. Equals, on the second line item, scrolling back up, it's best to use the formulas. You could copy and paste this, but I think the formulas would be better. You always want to reference to the data set. Equals, and scrolling back up to the insurance tab, equals, and we're now in Department B for insurance. Scrolling back up, that's going to be the 10,004 and enter. Next will be utilities. Again, straightforward. We're just going to say equals, scroll back up, pick up the utilities tab. For Department B will equal, scrolling back up, the 22,000 tab. Department A will equal, scrolling back up, the 27,000 and enter. We'll pick up the depreciation, same way, it's a direct expense, so we're not going to break it out or use any allocation method. Depreciation tab for Department A equals, scrolling back up, the 21,000 tab. Department B equals, scrolling back up, the 12,005 and enter. And then maintenance equals, scrolling back up, the maintenance tab. Department A equals, scrolling back up, 6,300, tab. Department B equals, scrolling back up, and we've got the 5,600 equals, or enter. So we did that fairly quickly, but again, that's just the data input. We're basically just pulling that information down. That's going to give us our total direct expenses. We'll sum these up, these items. We'll use our good old sum function for that, equals the SUM, the sum function. Double click in the sum function, highlighting those, and tab. We can do the same here, equals the sum of this column, and enter. Okay, so now we've got the expenses that we're going to have to allocate now. Well, first we'll come up with the departmental contributions to overhead. So the departmental contributions to overhead will equal the gross profit minus the total direct expenses. And so we'll copy that across. So this is going to be the contributions to overhead. So, and that's going to be, of course, the gross profit minus the direct expenses. And this is going to be one of the key line items that we may have when we're basically assessing the performance of each department. If, in other words, one of these departments were negative, then we might be in danger of basically eliminating the department. So these are the items or the amount that's being contributed to the contribution of the overhead. So now we're going to do the allocation of the indirect expenses, basically kind of the overhead expenses, the indirect expenses that we're going to have to use some type of allocation base. So these are the ones we cannot apply directly to the department. We're going to have to use some kind of method to allocate them between departments. We're going to use some type of allocation base to do so. So we're going to say, all right, this is going to be the allocated indirect expenses, and we're going to start off with the salaries. So we'll say this equals, scrolling back up, salaries. Now the salaries, as we can see, is going to be broken out based on the sales. So we're going to have to break out salaries by sales. So we'll do that down below. We're going to go down to a worksheet down below, and we're going to break out our information between A and B. So I'm going to say Department A, Department B, and total. And then we're going to pick up our sales. So sales for Department A and B48 will equal, scrolling back up, that's going to be the 825.6, enter. For B equals, scrolling back up, the 464.4, and enter. And then if we add those up, the sum of those two, the 825.6 and the 464.4 is the 1,290,000. Now we're going to use our percentage method, and we're going to see this repeatedly. So you want to be able to use this. This percentage is what we're going to, of course, use to allocate out the amount that we're allocating, which is salaries in this case, to the departments. So the percent is going to be equal to the department amount divided by the total amount of sales. So this will be equal to, for B, the department amount divided by the total amount. And notice we've of course formatted these as percentages. If we sum those up, then we're going to get the total of 100%. And that percentage then is what we can use to break out the salaries allocation. So we're going to say this equals then the amount of salaries, which was 26,000. So again, remember our problem here. We have 26,000 we need to break out between A and B. We're going to do that with the proportion of sales because we think that's a good allocation base to use, and therefore we're using the 64-36 allocation of the 26,000. So we know what the 26,000 is. We don't know how to allocate it between A and B. This is the method we'll use, 64-36, based on the sales ratio. So this equals the 64% times the 26,000, enter. This equals the 36% times the 26,000, and enter. And of course, if we add those two up, we should get to the 26,000 because that's what we're allocating out. So now we'll just go ahead and apply those out up top in accordance with our table. Salaries is going to equal the 16,640 for A, and it's going to equal the 9,360 for B. Okay, next item, we're going to go to insurance under salaries. So we're going to say this equals, scroll back up top, we're looking for the indirect expense of insurance. Now we're going to have to allocate that out too. We know what the amount is. It's 7,200. We need to allocate it out. We don't think that sales is the best allocation base to use. Instead, we're going to use square footage of the departments. And we know the square footage is going to be here. So that's what we'll use to allocate this out. Scrolling back down to another similar table, I'm just going to copy this data. It's going to be A and B. Now we're talking about insurance. We need the square footage, and we're just going to do a same kind of ratio analysis. So same, once you get this down, you'll see this all the time. It's a very useful tool. So square footage is going to be equal to the square footage for A and the square footage for B. And then we'll just add those up, equals the sum, giving us the total square footage. And now we'll just use the ratio analysis again. What's the square footage of Department A compared to the total? So we'll say, all right, this equals the 32,900 divided by the 47,000 and enter. And then for B equals the 14,100 divided by the 47,000 and enter. Then we'll equals the sum of the 70 and 30 and enter. Okay, so now we're going to allocate the insurance amount 70/30. So we'll just use 70/30. We know what the total is. We're just going to break it out 70/30 using square footage to find that ratio, find those percentages and or ratio. And then we're going to scroll back up and we're going to find the insurance, the 7,200. So I'm just going to put that in both lines here, and then we'll just multiply across. So the allocation is going to be that 70% of the 7,200, enter. And for this item, it's going to be 30% of times the 7,200, enter. And if we add those up, then equals the sum of the 5,040 and the 2,160, or the 7,200. Okay, so then the next item is going to be, well, let's basically allocate that out. We've got our allocation now. We're going to put that into our table in B41 equals the 5,040 for A, and for B equals, and that's going to be the 2,160. So there we have that. Next line item is going to be depreciation. I'm going to say equals and scroll back up top, and that's going to be depreciation. So we'll pick that one up, and depreciation is going to be allocated based on the square footage as well. So we're going to use the square footage for the depreciation, and that of course would make sense. So we're going to go back down and say, okay, that's a good basis to use. It's going to be a very similar calculation. We can copy most of this table. I'll just copy this item and do the allocation calculation again. So the square footage is based, I'm just going to pick it up from the up top. The 32,900 square footage for A, and then equals the square footage for B, 14,100, equals the sum of A and B. There's our total square footage. Same percentages. We're going to say this equals the 32,900 divided by the total. This equals the 14,100 divided by the total. Summing those up gives us 100%. So 70/30 breakout to break out the depreciation, which equals, and if we scroll back up, we're looking for depreciation, which will be the 15,800. So 15,800. So this is going to equal 70% times of the 15,800, and this is going to equal 30% times of the 15,800, and this will equal the sum of those two items, which of course is 15,800. So same type of breakout formula for depreciation. We'll scroll back up, we'll put that in place. So in B42, this equals, scroll back down, we're picking the 1160 tab, and then this equals, scrolling back down, we'll pick up the 4740 and enter. So there we have those two items. So there is depreciation. Then the next line item, office. So I'm going to say equals and scroll back up, and we're going to pick up the office expenses and enter. And then we're going to break out the office expenses. If we scroll up, that's going to be based on the number of employees. So we're using the number of employees as the activity base. We think that's a better activity base than sales or than based on the square footage. So number of employees, which is 72 and 48 A and B respectively. So similar kind of breakout. We'll do a similar type of ratio analysis, but this time with employees between A and B. We're just going to say, all right, Department A has how many employees? 72 employees. And Department B has how many employees? They've got 48 employees. That's a total of, summing those up, 120. Ratio analysis, comparing A to the total, equals A 72 divided by the total, 120. And then this one equals B equals 48 divided by 120. So if we sum those up, it's going to add up to 100. So we're going to break out 60/40. What are we going to break out? The office expense. So we're going to go back up and say, well, the total office expense was the 46,000 in our data that we're now going to break out between A and B. So we're just going to say, all right, 60% of the 46,000 is going to Department A, and 40% of the 46,000 is going to Department B. If we sum those up, we're going to get the 46,000. So then if we go back up top and allocate that out, we're in Department A equals, scrolling back down, that's going to be the 27.6 tab. B is going to equal, scrolling back down, and that's going to be the 18.4. Enter. Okay, so there's the office, and that's going to give us the total indirect expenses. If we sum that up, there we have the totals for our two departments, and that'll give us our operating income, which is going to be equal to the contributions to overhead minus the total indirect expenses. Do that on both sides for the two departments. So there we have it. Now, note that we have a question down here that's a common question. Should Department B be eliminated? And you can see here, Department B is probably going to be worried. They're going to say, oh man, we've got a 10,620 loss on our operating income. Should they be eliminated? If we got rid of them, you would think that we would be 10,000 higher because there's a loss. So you would think that that should mean we should get rid of Department B, but that's not really the case because all of these expenses are simply allocated. So the fact is that if we got rid of Department B, we wouldn't necessarily get rid of these expenses. We may get rid of some of them. They might be lowered, but it's just the fact that we're allocating these expenses between Department A and B. I mean, if we still have the whole building, we'd still have to pay insurance on it. We'd still have insurance. We'd still have the depreciation on the building we'd have to deal with. And by the way, I just adjusted that. It should be insurance and then depreciation. But in any case, we couldn't eliminate all of these items. And therefore, really, the bottom line is this item, the department contributions to overhead. And that's still positive. So unless we dig into these numbers and say, we can eliminate more than 24,000 of these numbers, rather than us just having to allocate them back over to the other department, because that wouldn't be eliminating them. It just means that this side would be higher and this side would be gone. If we can eliminate 24,040 or more then of these costs by eliminating department, maybe that would be the case. But really, this is the number that we're looking for. If this number goes negative, then it very much might be the case that we should eliminate Department B, because those are going to be the direct expenses. When we get into the allocated expenses, we need to allocate them for our decision-making purposes for financial accounting, but it's not necessarily the case that if we eliminate the department that we remove the expense. So that's why we're going to break it out in this type of format. Also note that to test this type of question, you'll almost always have this scenario in like a book problem where you have a negative operating income, and a positive department contribution to overhead, because that's the only way you can ask this question. I mean, you can ask it different ways too. If this number was negative, you would say, yeah, then possibly you would get rid of it. But usually this is going to be the confusing scenario where this is negative and this is positive. That's what the question is going to want to ask about, because this is the mistake that could happen in practice, where we eliminate a department based on this number when believing that it's going to increase our bottom line by 10,620, when that's not the case, because really these items are just going to be allocated back over here and we're going to lose possibly 24,040. So the only way to really ask that question, unless you ask multiple questions, is this scenario, that scenario where this happens and you have a negative number here and a positive number here.